Welcome to Beyond the Portfolio podcast. Today we're joined by Michael Ma, founder and managing partner at Emeritus Wealth Management, whose exceptional 20-year career has made him one of the Northeast's foremost specialists in academic retirement systems and wealth management for university professionals. After mastering the intricacies of institutional retirement plans during his impressive 19-plus year tenure at TIAA, Michael took the bold step of establishing his own firm to better leverage his rare technical expertise in solving the unique financial challenges that professors and administrators face, from multi-institutional benefit coordination to retirement transition strategies that standard wealth managers simply cannot provide. With his economics foundation from the University of Michigan and a client-centered approach that prioritizes responsive, personalized service, Michael has built Emeritus Wealth Management into a practice that brings academic level rigor to the critical work of securing financial futures in higher education. Michael, hello and welcome. How are you today?
Good, John. Appreciate you having me on your podcast. Happy to be here and tell a little bit more about our story.
Yeah, really excited to kind of dive into it. So let's get started. Could you first tell us a little bit about your path to becoming a financial advisor?
Yeah, happy to share that story. So, obviously, went to University of Michigan, studied econ, always liked the ideas of the markets, finance, was always fascinated by that aspect of it. So naturally kind of gravitated towards this type of role. Also like communicating with individuals, helping individuals and helping people. So, just the natural blend of, my interest of the markets and stocks and bonds and how they all work with the goal of helping individuals. So was fortunate enough that when I graduated, ended up getting a job at TIAA back in 2002, and sort of worked in their sort of operations department in the beginning and kind of worked my way from there to a financial consultant and then ultimately to a wealth advisor and a senior wealth advisor during my 20-year tenure there.
Amazing. And I know there's been a couple of different events throughout your life from what I've read and researched. So could you talk a little bit more about what specifically inspired you to pursue this path in financial advising?
Yeah, I think, at the end of the day, we all grow up in different paths and have different journeys, and I think we learn from it. So just speaking personally, my family and my parents are more, I would say, blue collar type of workers. So, they weren't in the corporate world. They were either a small business owner like my dad, who had a dry cleaner for many, many years, and my mom, she was in the service industry, hospitality industry. So seeing them work really hard to establish a solid foundation for my brother and I to get a good education, but also seeing that they were able to save aside money to build their own retirement assets so that they could eventually step away from their profession. So that really resonated, just kind of that hard work background and just seeing, the sacrifices that they made made me want to make sure I help others, making sure I help others achieve their goals, just as my parents were able to achieve their goals.
Yeah, no, I appreciate you sharing. A lot of that personally resonates with me as well. Like my parents are very similar story of kind of, working on their own, really building what they could once they came out here to build a life for themselves as well as me and my brother. So really appreciate you sharing that. And you kind of alluded to it, but how has that kind of shifted into your philosophy when it comes to helping your clients build their wealth, build their futures, and aligning with their plans and goals for what comes next in their lives?
Yeah, I think, so number one, I think our focus is understanding what their goals are, right? So as a good advisor, you want to know, hey, what are your goals as a specific individual? Because everyone has different goals, whether it's to ensure stability of their assets, meeting their retirement dreams, purchasing second property if they're fortunate enough to be able to do that, leaving a legacy for their children. So our first step is just understanding, what are your specific goals? What are you looking to achieve? And then from there, building a financial plan to help clients achieve that goal. At the same time, we want to remain disciplined. We want to remain strategic. And what I mean by that is, focus on long-term growth opportunities that the markets can provide. balancing that with more conservative assets. So that way, if there's a market correction, which we're sort of going through right now with the recent events going on with tariffs and that clients have some level of protection. So I think to answer your question, we want to learn what everyone individual goals are. We want to know, hey, how are you progressing to those goals? What changes do we need to make? Whether it's your savings rate, your investment strategy, whatever it may be. I think that's been, primarily the focus that we've been really working on here at Emeritus.
Yeah, no, thank you for sharing. And you kind of touched on it now of like the current volatility that we're seeing in the market now. And as you probably well know, a lot of these financial decisions kind of come with some emotional impact as well. How do you kind of navigate the emotional ups and downs that come with a volatile market as well, especially when you're working with your clients?
Yeah, to your point, I think sometimes as financial advisors, we do have to also be psychiatrists to our clients and sort of ease everyone's anxieties and fears, especially when there's times of uncertainty, right? And, I don't know if the world's ever certain. I don't know if there's ever a time where there's complete peace and harmony in the world. Probably not. So
Right.
there's always going to be uncertainty no matter what. And our job is to focus on the long-term picture, focus on what's worked in the past with the expectation that's going to continue to work in the future, and really help clients kind of stay grounded, right? We get it, when things are very volatile, the initial emotional decision is how do I go from an uncertain environment to a certain environment, right? How do I shift my assets from something that's risky, that's done really well for me over the last, 5, 10 years, and move it to something that's maybe a little bit more conservative,
Right.
less volatile. And that is the initial reaction, and that's a very logical reaction. I mean, I think we can all agree that anytime we go through moments of uncertainty or we're scared, we're going to want to go into a more defensive position. And again, rightfully so. So we acknowledge that. Anytime a client reaches out, we're always going to acknowledge that, hey, we understand it. We agree. It's can be scary out there. We get it. But we're also optimistic. We're always optimistic that things will rebound, things will come back. I would say there's been resiliency in the markets. So our goal is to, kind of ease clients' fears and concerns, make sure they stay grounded, make sure that they're focused on their long-term picture, and making sure that we have a strategy that helps them during times of volatility like we're experiencing now, but also knowing that eventually this will subside and things will be, recovering in the future. So I would say at the end of the day, times like these are really important times for us to stay in front of our clients and help them,
Yeah.
and help their concerns. That's important. So, we want clients to remain calm, and this is also why we do the financial planning, because the planning does provide us the confidence as advisors saying that, hey, we know that markets can go down. We built that into your plan, and your plan has been able to sort of sustain that for quite a bit of while. We understand you're nervous, but we know this can happen. We built this in, we modeled this in. So stay grounded, stay to the plan and not try to deviate too much from it.
Yeah, no, I love that last point of, the more well planned you are for situations like this, the better the outcome, the better results, and the more grounded you can stay within your current plan, regardless of what the day to day looks like. So I really love that. Kind of shifting a little bit, would love to learn a little bit more about what type of clients Emeritus and yourself kind of specialize in, and why you kind of chose that route and why that works best for what you guys are building.
Yeah, so obviously my history, or before starting Emeritus with my partner Kevin and our operations manager Andrew, we were working at TIAA, and TIAA is very niche, and they work with a lot of academic university professors, administrators, and physicians. So my 20 years of experience was really working with those individuals. So it was just a natural fit for me to kind of continue that course and continue to help those individuals that wanted to work with us. There are, university contracts are, 403B, 457B. There's some uniqueness to it. There are certain rules that apply to these contracts that might be different than your normal 401k profit sharing plan that you have in corporations. So because we spent so many years understanding these contracts, understanding how they work, we have that expertise to help clients, who work in these specific fields of understanding their retirement plan and trying to leverage the best options that we think can help them, right? So it was just a natural fit to say, hey, we've had 20 years experience working with individuals in this specific area. We know them, we understand their needs, we understand their profession, we also understand how accounts work. So it's just a real natural fit for us to continue to do that.
Yeah, no, that's great. I mean, there's definitely so much advantage of having that specialty niche kind of understanding and working with those clients for so long. I guess one follow-up question I have for that is, could you speak to maybe a client, a moment, an experience that you kind of had working with an academic where you saw great success and impact, or you just kind of said, wow, like we really made a big impact here for this individual? Could you share an experience like that?
Yeah, I mean, there's so many experiences that come to my mind, but I think one that kind of resonates with me is there was a particular individual who unfortunately ran into some health challenges later on, and they were concerned like, hey, financially, are they in a position to be able to get the care that they need to ensure that they remain comfortable? And we were able to do, enough planning and modeling to ensure that they did have enough in assets so that it wasn't a burden to their, other family members. And, the sense of relief that this person had, knowing that, hey, financially, we've, over many years, were able to accumulate their assets, help help distribute those assets appropriately to the point that she would be able to increase her costs and yet have the care that she needs so that she continues to remain comfortable as she's going through this health issue, and yet not be a burden to her other family members based on how much money she's spending. And that is satisfactory. I mean, that's sort of, that gives us a lot of personal satisfaction knowing that, hey, I helped this particular individual calm their concerns about healthcare costs, and by doing the right planning, we were able to assist them. That's one example. I think that's an example that certainly resonates. And there's another example where, and this is maybe when you talk about like clients purchasing a second home, and I get that not everyone's fortunate enough to do that.
Right.
And this particular individual wasn't sure if they could afford this property, but it was something that they always dreamed of doing. And we did the planning to say, hey, you can do this. And we did this, 6-7 years ago, and they've been enjoying living in this home, for the second home, for quite a bit of time, and they were so grateful and thankful that we were able to do this and plan, because at this point, as housing prices have increased dramatically over the last 2-3 years.
Yeah.
That if they were to do this today, they probably couldn't afford it, given that how much prices have increased and mortgage rates have gone up and things of that nature. So I think just when we do the planning and we know we can help our clients, but those are two examples, two different extremes, right? One is helping someone in a health care situation, which is very important, and giving them the confidence of knowing that they could take care of themselves financially in that regard. And then the other extreme, more of a luxury activity, but still both rewarding, where, both clients are very appreciative of the advice that you give them.
Yeah, 100%. I really love how different those two scenarios are, and the diversity in terms of how you're able to make an impact and for what specific scenario. So I think that's really cool. And I think the first one especially kind of resonates and probably hits home for a lot of people that might be in a somewhat similar situation. So appreciate you sharing those stories. I think it's really cool. And, shout out to those people that were able to make it happen, those specific clients, and for you guys to make it happen. I guess another question that I kind of have is, what has been kind of effective for Emeritus and you guys in terms of building trust with new clients? I know that that's like a very difficult scenario, difficult thing to really achieve, especially how things have kind of changed over the past decade or so, from COVID hitting and all the different world impacts that are going on. So how have you guys kind of taken that approach, and how do you go about maintaining and building that trust?
Yeah, so a lot of times any new clients that we get are coming from referrals of our existing clients.
Mm-hmm.
So that has helped out because it's a friend or a family member referring us, and right away there's initial trust that's built up. But to your point, let's say it's someone who was able to find us or source us through the internet, right? So they don't know us individually, they never worked with us, they have no sense as to the idea of what we're going to do for them. And, in this industry, financial advising, there's so many financial advisors out there. And, it can be a tricky industry to navigate through, right? Everyone wants to make sure they're getting the best advice from their advisor. So I think the way we help to calm our clients is we're happy to look at their situation and generate a complementary plan for them and sort of say, hey, before you sign up and decide to do any sort of business with us, let us take a look at your situation. Let us look at where you're at and give you our feedback and thoughts of here's how we would do things for you. How much different is it from what you're currently doing? And what are the values you're going to get out of it? Are we going to be able to decrease your tax liability? Are we going to be able to potentially further diversify your portfolio? Are there things that you're not considering from an estate planning perspective? So I think we're able to give a lot of that advice initially as a complimentary service. And, we always tell our clients, hey, at the end of the day, we would like to work with you, but it's your money, it's your comfort level. So if you feel that our advice that we're providing isn't really meeting up to your standards, then you don't have to proceed forward. But we're willing to do that initial work just to prove to individuals who've never worked with us before the type of advisors that we are.
Yeah, no, that's great. Providing so much value up front and just kind of leaving the door open, getting the conversation started. I love that. Yeah, seems like a really great strategy and methodology to kind of start building that trust like you mentioned. Shifting gears again, what is a piece of financial advice that you wish more people kind of knew about or took into consideration as they're trying to build out their own financial planning? A lot of people nowadays, especially with all the tools, kind of do this on their own and might not be ready for a financial advisor, but there are obviously some shortcomings that come with that. If you were to share a piece of advice or just like a tidbit for people to take into consideration, what would that be?
Yeah, I think, so one thing I think people run into is when you work with a financial advisor, there's, every financial advisor might do something differently. When I think of a financial advisor, and I'll get to answering your question about what advice I would give, is, for us, we're not individual stock pickers, right? So I
Yeah.
think there's a misconception that I'm a financial advisor. I'm going to tell you here are the top 5 stocks that you should purchase today and when to sell it. That's not our role. That's not our
Yeah.
job.
Yep.
It's not what we do. Our job is financial planning geared towards growing a strategy, making sure you're diversified, making sure you're taking advantage of tax scenarios to help you either save taxes today or tomorrow. So I think if you're someone who's starting out, I think the biggest entry point that we run into with people is just start saving $100 a month, $200 a month, $300, whatever you can, and initially start with the most basic portfolio, which might be just investing into an S&P 500 fund as an example. I think just starting to save and invest is the key component, and not worrying about as much as far as like, well, if I'm going to invest $100, I want to buy this stock because I think it's going to go up 20%, 30%. No, that's not really what you should be focused on. Just consistent saving, being patient with it, investing. The way we do it is geared towards long-term growth. It's not geared towards instant wealth, meaning that we're not trying to, take your $100 and make it $1 million in the next 90 days or something insane like that. That's not the idea. So
Yeah.
I think my piece of advice for anybody who's maybe not starting out, start to do something, because doing something is better than doing nothing, even if it's very little. And with technology today, the barrier of entry is so much different. Opening up an account and investing money is so much easier than it was 20 years ago.
Yeah.
Um, so there's no real excuse for anyone to not start investing because the barrier of entry has been so lower and the cost is so much minimal. And then as you build out your wealth, yeah, things are going to get more complex, and that's when financial advisors are going to add more value um, to your planning because they're going to bring in things that you haven't thought about.
Yeah, no, that's such a great point. It sounds like it's really about just getting the habit built, doing that early, getting used to that, and really looking at that long-term plan as opposed to focusing on these short spurts, these little bits of gains that may or may not happen. So I appreciate that advice, and I think that's really great to just start small, what you're comfortable with, build the habit, and flex that muscle and keep growing. And as you grow, it seems like you adjust your strategy and potentially add in an advisor to really help with navigating that entire plan. What's like a lesson in particular that you might have learned throughout your career in this space, and how you're kind of applying that to your own life, to your own clients, and things of that nature?
Yeah, and again, I think this goes to the fact that starting this industry right out of college, you get to learn from what other individuals have done that have been so successful. And I go back to what I just said earlier, which is just start, get going, right? So I've learned that the earlier you begin investing, the better it will likely be for you in the long run because of compounding interest and just being patient. It takes a while to accumulate your assets, but once you start to accumulate and the assets start working for you, it really becomes rewarding. So I've learned from my clients who've been able to successfully build up their retirement accounts by staying consistent, just saving every time they can, investing and not making knee-jerk reactions. Again, like right now with the markets being very volatile, some investors who've never dealt with this might feel like, hey, I want to get out of this because I'm scared because I've just seen my portfolio go down, several hundreds of thousands of dollars. It's, again, natural reaction to feel that way. But we've seen time over time things rebound. So I think, I learned a lot from my clients as they learned from me. And I learned that a lot of them were successful because they were patient. They weren't, overzealous. They stayed the course. They saved as much as they could within reason. I think we always need to balance out, living for the now and living for tomorrow, right? I'm not someone saying you need to save every dollar. And then the other thing I learned too is, also enjoy your wealth, right? So if you get to the point where you accumulate enough assets, I think it's okay to spend it down. I think sometimes people get too anxious about not spending down because they're worried about running out of money, which I get is a legitimate fear and concern. Nobody wants to run out of money when they're 90. That's scary. I get that.
Yeah.
But also, we don't want you to look back at 90 and you have all this money left over and you think like, hey, probably could have done more with some of that money in my 60s or my 50s. And if I knew I had this much money at my 90s, I probably would have spent a little bit more and maybe done a couple more vacations with my family to build more memories. So I think we've learned, as well from our clients that sometimes we are going to encourage them to spend more. And that's kind of played to my life as well, where I'm trying to balance between saving money for my future, making sure that my family is taken care of, but also enjoying life today because, that's part of living is enjoying, today and balancing it out for tomorrow.
Yeah, no, I really love that. That's such a great point of, what's the point of having all the wealth if you never get to spend it, share it, create memories with the people that you love? Like, that's such a important aspect, and I love that you hit on that. So thank you for sharing that. And the last question I kind of have here is, what's exciting you, whether it be with Emeritus, whether it be for what you're building? We'd love to hear that from your side, and we'll kind of wrap up.
Yeah, so first of all, it's been a great journey in the last 4 or 5 years of starting Emeritus. and we really have hit in our stride and working with a lot of clients, and we're motivated and excited to help more of our more individuals in the academic space to be able to retire and achieve their retirement dreams. So, we certainly feel like, hey, we have the capacity to help more individuals, and we get a lot of personal satisfaction from that. So I think it's been great. And, I think over the next year, 2, 3, we're going to continue to expand and grow. I think there's a lot of opportunity for us to help more individuals. Again, whether it's retirement goals or other financial goals. And then, I think personally, just the growth of AI technology. I know that's been sort of a concern for some individuals, and we get that. But I also think embracing some of that technology, and that's going to help us to help more individuals, because it's going to make us more productive, more efficient. So I don't look at AI as something that's going to hinder our ability to help people. I think it's just going to allow us to help more individuals and do it in a really effective and a great manner. So I'm excited for that prospect. So I think there's just, really excited for the future of our company of helping more individuals and using technology to continue to leverage that. I think it's going to be, exciting times coming ahead.
Yeah, I couldn't agree more. AI is really, just on the brink of what could be, and it'll be really exciting to kind of see that. And I'm very excited to see where you and Emeritus go. I really appreciate your time today, so thank you so much for joining us. And one last thing is, if anyone is listening, where can they find you? Where can they find Emeritus? Where's the best place that they can reach out to you and potentially work with you, or at least maybe get a hint of that complimentary planning package?
Yeah, so I think number one, if you want to learn more about our company, go to our website, which is, Emeritus WM Wealth Management. So we shortened up the wealth management to just WM, emerituswm.com. And then you'll see more of myself, Kevin, our operations manager, Andrew. And then from there, you'll be able to click on the contact us. So we're available there. And then also, if you wanted to give us a call, you can always reach out to us directly as well. Phone number, 267-322-2540. So always welcome to reach out to us. But if you want to learn more about us, go to our website. Or if you want to just give us a call directly as well. Or you could also email us at michael.ma, spelled M-A, at emerituswm.com.
Awesome. Thank you so much, Michael. Really appreciate your time. And hopefully we'll see you back on the podcast again.
Yeah, thanks, John, for having us. Thank you so much. Appreciate it.